As is with every virtual conversation, always some faux pas somewhere. Our conversation today is between Haslinda Amin, Chief International Correspondent for Bloomberg, and of course, Rajeev Misra, CEO for SoftBank Investment Advisors. Welcome to the program. Haslinda, over to you.
Especially so in India. In the first 6 months of the year, Indian startups raised about, $12 billion from VCs and private equity firms versus $1 billion just last year. Perhaps it is the fear of missing out, FOMO, most betting on huge returns after Zomato's successful IPO. Now, before I bring in Rajeev for the conversation, I'd like to have this polling question posed to you. And the question is, Indian IPOs are beating the benchmark by the most in 7 years. Is the pace of that outperformance sustainable in 2022? Easy choice. 1 is yes, and 2 is no. Okay. For now, I'd like to invite Rajeev Misra. He's CEO of SoftBank Vision Fund, which was set up in 2017 to provide backing for technology startups. Rajeev, good to have you with us. Really excited about this conversation. I'm afraid I'm not hearing Rajeev. I'm wondering if Rajeev is on mute.
I'm not on mute, so this was good.
I hear you now, Rajeev.
There was the studio involved.
We talk about how India has been attracting a lot of capital, sending valuations skyrocketing. Is it a case of capital chasing the top 3-4 assets in the various segments, and hence investors are willing to pay a premium to secure their share? Can valuations be justified, do you think?
Well, first and foremost, let's look at the last 10 years. India was, congratulations to all the founders and investors who stuck it out in India, because we had no tech IPOs in India for a long time. And it was difficult to, for a while, justify investing in India, because we didn't even know if the Indian local markets had the depth. Could they invest? Indian companies were not allowed to list overseas. So this is an amazing turnaround since the IPO of Zomato, and it's heartwarming to see how much capital is coming in because of that. The answer to your question, I don't think it's top 3 or 4 assets. We as SoftBank have been investing over a decade in India. We've roughly invested $14 billion over the last 6 years, perhaps the largest tech investor, overseas tech investor in India. And so far this year, we have invested $3 billion and are looking to invest in more. And it's not in 3 or 4 companies. We have invested in 24 companies in India. So it's not that there is a feeding frenzy for 3 or 4 assets. There is tech companies. There's from in education and e-commerce to Ola Electric to Fintech. The fundamental question you're asking is, are these? We had an IPO of Nykaa today, which went up post IPO. There is a lot of pent-up demand from retail and institutional investors for tech IPOs in India. Can that be sustainable in the long run? Most probably not, because there is a rarity value today of finding good assets in India, of good tech companies. As the number of companies that go public goes up over the next 12 months, and we have 4 or 5 coming, Delivery, Paytm, Oyo,
right,
Policy Bazaar, etc. Yes, the investors will have a multiple choice of other companies to invest in, and that frenzy will come down. But the private markets are very robust. It's not just the public markets. There's a lot of private capital coming into India.
I'm just wondering what's behind that momentum. You're talking about how the Vision Fund has pumped in about $3 billion and looking to invest more. What's different this time around? What's driving that momentum? How are you assessing the rush of startups and the new cohort of startup founders, for instance?
Couple of things. Indian companies are not just for India. There are a lot of Indian companies that are going global. So there are a lot of SaaS companies from India, like Mindtickle, Zeta, others, which are not just serving Indian clients, but are going global. And secondly, I don't see us investing $3 billion as something new. That's the pace we have been investing over the last 3, 4, 5 years. Yes, there are a lot of new investors coming in, but India as a story is no different than the rest of the world. There is a lot of liquidity in the markets across the globe. Capital is the cost of capital has become very cheap around the globe. There aren't that many interesting investment opportunities that provide double-digit returns, 15 to 30, 25% returns in real estate or in your traditional bricks and mortar businesses. Hence, it's a global phenomenon that a lot of capital is going into growth tech companies across the globe, excluding China, of course, not as much. But India is no different than Europe or US or Latin America.
You talked about wanting to invest more. How much more? Give us some kind of perspective to show the kind of commitment you're making to India. In 2022, what kind of investments are you looking at?
Well, if we find the right companies, we could invest another $5 billion to $10 billion in 2022. If we find the right opportunities at the right valuation. We came in and invested again in Flipkart, which we had exited in 2018. As I said, the quantum of capital we are able to invest today is not as high because the founders are not raising as much money. They're raising $150, $200, $300 million. So each investment is roughly $200, $300 million. Unlike 2-3 years ago, when we could deploy in OYO or a Paytm $1 billion, the ticket size has come down dramatically. So to invest $3-4 billion, it will require like investing in 15 companies, $200 million each. We have a local office which is working hard and building relationship with the young entrepreneurs and building relationships 6 months, a year before they need capital, helping them, advising them, and hence when they are ready to raise capital, we are there to provide the capital. And there are two forms of capital, by the way. It's not just investing in a new primary round, but also following on. We did a lot of follow-ons on Academy, on Off Business and others, Ola Electric, etc., where you follow on over time. And so a lot of investments we have done over the past 3 years, we will be putting new money into them as they raise new capital.
You just said that you're looking to invest again in Flipkart, which you made an exit in 2018. Was it a mistake making an exit in 2018? And what's the thinking then and what's the thinking now?
It was not a mistake. Walmart bought Flipkart, about 80% stake in Flipkart. And we were kind of, we felt we didn't know how the company would look with Walmart owning 80% of Flipkart. We followed the progress of Flipkart, we got convinced that it is going to be one of the two major players along with Amazon in India, and we went back and we invested earlier this year. So it's not a question of mistake. It was just that we didn't know how a majority-owned Flipkart by Walmart would look over the next couple of years, and we got comfortable with that.
You've had a lot of successes in India. Paytm is one. But when you take a look at OYO, for instance, it's a bit more controversial. I mean, it's losing a lot of money. What is the business proposition for OYO?
Okay, it's not losing a lot of money. They cut costs by 70%. They regain focus. And by the way, we have Oyo quite a bit. We have quite a few of our companies, and I'll come back to Oyo, but we have quite a few of our companies go global. First Cry in the Middle East, Lenskart in the Middle East, Paytm in Japan, etc. Oyo in Europe. So Oyo is not just an Indian business. India is a big chunk of its revenues. It's got a huge business in Europe with holiday homes and has a presence in Southeast Asia and in the US. Oyo, I believe, will become profitable by next year. The costs it managed, Ritesh did an amazing job managing the crisis, which hospitality business did not get affected by COVID. Everyone did. Travel went down to nothing. So they did an amazing job in not just cutting costs, but also refocusing the business in the right geographies. Also, investing the time they had in building the tech stack. I mean, what does Oyo do? It offers a proposition to hotel owners, to consumers who come and stay in the hotels, a way to manage their assets and increase profitability through dynamic pricing, through better housekeeping, through branding, etc. And Oyo kind of pulled back its pace of global growth and spent a lot of time and capital in building the technology stack, which makes the value proposition much more appealing and the churn down of hotel owners. And Oyo is slated to go public over the next few months, so I won't speak much about it, but we are very, very constructive on Oyo.
Rajeev, Vision Fund just posted a pretty rough quarter, record loss of about $7 billion. What happened?
$7 billion when you have 130 billion of assets, okay, is 5% move. And that will reverse this quarter and next quarter and the following quarter. And that was a one-off.
Still, it is a record loss.
It was not record. We lost more during COVID, but it's 130 billion of assets. And a lot of it came from China. Most of it came from China, from DD and a few other assets that we had to write down in China, which came as a surprise to us last quarter. It affected everybody on the planet, all investors who have invested in China. We have roughly 20 billion in Vision Fund in China, and that was the bulk of the loss. But that's behind us now.
Speaking of China, Rajeev, SoftBank has said it will be cautious in investing in China. Can you explain what that means? Will there be changes to how you invest in China?
China, we have a team of 25 folks. China is a market we'll stay in. China has many different aspects to it. Most of the noise that's coming and most of the regulations that are coming are on B2C businesses, where the businesses are touching the consumer, where there is data issues. We believe that China is one of the major country centers for AI innovation in the world. On the long run, there are many exciting opportunities. We're investing in life sciences in China. We're investing in SaaS companies, in B2B business in China, and in deep tech, robotics, autonomous, etc. So yes, we have reduced our pace in China because we're not investing so much into B2C businesses that touch consumers, but we are still an investor in China.
How do you assess Beijing's moves, which some say have been pretty tough, and what does it mean for the startup scene there?
I won't have a view on Beijing's moves, but what I can say is that the startup scene is still there. It has just moved away from a lot of B2C businesses that were serving consumers, like online food, online grocery, new startups doing e-commerce, to more deep tech, which is what China wants to focus on: designing chips, robotics, life sciences, new drugs, etc. And they want more focus on that, and we are investing in. We have invested in roughly 10 companies in China this year, and those are the sectors that they want to focus on, away from perhaps consumer touching businesses like gaming and commerce and so on.
You talked about how you're excited about the potential of India. Talk to us about what's the most exciting technologies that you're seeing out of India?
Well, we have invested in education in India with eruditus and both in fintech. I think fintech is the biggest opportunity in India because India is underbanked, and we had Paytm and Policy Bazaar. We're looking at a few other fintech companies because financial inclusion is a must in India. Just for data purposes, 1 in every 4 unicorns we have invested in India. Okay, so if you look at all the unicorns today in India, we have invested in 1 in 4. The big ones that we like still are B2B businesses that serve businesses to improve their HR or they improve their sales quality and so on, which are software companies that are not just for India, they can go global, prove their business in India and then go global. So SaaS like Freshworks, IT services, Zeta, Whatfix, MindTickle, lots of these SaaS companies that we have invested in. And of course, education is another big piece that we're investing in, and fintech.
Any plans for India-specific funds?
We don't have any country-specific funds. We have a large pool of capital, and there is no specific budget for India. Any good investment we find in India, we will invest as much as we can. The team is very busy. It's expanding. We not just only invest in India, but we have to realize that we also help these companies raise debt, like we helped Oyo raise debt overseas. We have these companies go global, go to Japan, go to the Middle East, get to Europe. So we help find them clients in the US, like Zeta, banks who will use their credit cards. So we also have an operating group, which is helping. And we have very senior people involved in India with Sumer, Munish, and others who are, and we have a dedicated team of over a dozen investment folks. Perhaps the biggest investment team of a foreign investor in India. So we have good local presence, and there is no limit per se of X dollars that we have for India. So we don't need a fund because it's our own capital.
Having said that, how will India fit into your investment plan in the future?
No different than the past 10 years. We have, we invested in Ola Electric 3 years ago when there was, no electric revolution going on around the world. And we stuck with it. We tried 3-wheelers with electric. We tried so many permutations, and now it's coming to fruition. We have a 25% stake in Ola Electric, which is now raising capital at $3 to $5 billion. So no different than the past 3-4 years. In India is a major part of our ambition. I can't say we're going to dial it up or dial it down. We never dialed it down. So
dial it up then, Rajeev. I'm just wondering, in all the years that you've been investing in India, what are some of the challenges?
We will dial it up if you find the right investment opportunities. We are very keen to.
Okay. What have been some of the challenges that you've gone through in investing in a market like India?
Finding exits. Despite India's many advantages, most have doubted that you could make money investing in India for the past decade, where they said per capita income was low, there was not enough innovation, capital was scarce, mentorship was not there. For many years, that might have been true, but now the ecosystem has matured. Incomes are rising, capital is abundant, the founders are more experienced and innovative. You have repeat founders who have sold businesses coming back and starting new businesses. They're mentoring new founders. There are multiple returning entrepreneurs, as I said, like Cred, InWealth, Navi. So I believe that the Indian tech ecosystem is taking off, and that our patience will be rewarded. The IPOs of, as I said, of Zomato, Oyo, Paytm, Nykaa, Policy Bazaar, others will get more investors to come in and put capital. So this is India's time. Congratulations.
Any regrets? Any regrets that you did not put in more money into Zomato, which is now valued at $14 billion?
We invested in Swiggy. We couldn't invest in both. Right?
So no regrets, not putting more into Zomato.
Oh, there are always regrets having put in more money, of course. There are always regrets, but that's past. We could have, but look, when you've deployed $14 million, it's a lot of money in India. And when you have 25 companies and 1 in every 4 unicorn we have invested in, no major regrets. Could we have done more? Yes, but.
Rajeev, I want to get your take on talent. The Great Resignation is now a thing. The pandemic has gotten people to reassess work, how they work, where they work. Millions have chosen to quit their jobs. They don't want to do uninspiring work anymore. How do you view talent? How do you retain talent in such an environment?
Yeah. The best way to retain talent, whether it's in our organization or any organization, it's not just through money. It is by giving the people a voice, the employees a voice, that they have a say in decision making. By giving them the platform that they get noticed, that their ideas are being heard. You have to touch them more. You have to, and which is difficult when you're working remotely. But you have to stay in touch with them through WhatsApp, through phone calls, through what have you, because the new generation, it's not just about money. It's about, hey, am I important for this organization? Do I make a difference here? Do they care about me? And you have to spend a lot more time with people management than just stock options and a steady job. But having said all that, India, I think, has tremendous talent depth, unlike Europe and US, where there is a major problem for tech talent, for all kinds of talent, not just tech, for HR, for CFOs, for everything. When we in the Vision Fund have 300 portfolio companies, and growth, the biggest constraint for growth today are 2 things. One is human capital, and other is supply chain, getting your products on time. Where the products could be chips, could be clothes, could be whatever you're selling. And so the supply chain is disrupted globally. But human capital is a huge constraint, not just for tech companies, it's for everyone. And the only way you can retain human capital is to treat them as partners, to treat them with importance, and making sure that their ideas are heard.
Speaking of human capital, are you concerned about the spate of resignations at Vision Fund at a time when you're trying to ramp up in investments?
Well, we have net added 40 people this year. We have 165 investment folks around the globe, which is a lot, which we were at 120 or beginning of the year. Some will move on to start their own funds, manage their own capital, or find other opportunities. But not concerned. It hasn't stopped our pace of investing at all. We invested $14 billion last quarter, so it hasn't affected our pace. We have enough bench. We're able to attract enough talent globally. So we have added, as I said, 40 new investment folks net. So after losing people in the past 3 months. We are continuing to hire at all levels. But having said all that, yes, there will be a food fight for human capital. I'll tell you why. Because more and more traditional asset managers are getting into growth tech, whether it's private equity, whether it's hedge funds, what have you, are getting into growth tech and are looking for people with talent, with experience. And the Vision Fund is one of the targets for that. So yes, we have lost some people, but we have net added people.
Any plans to review compensation?
We just came out with a new carry plan this week. We are reviewing compensation constantly. Yes, it is one factor.
Rajeev, there have been some concerns regarding the, phenomenal pace of growth of fintechs in India's financial services space in particular. What has been SoftBank's experience globally, and what's your view on how these firms should be regulated in India?
Yeah, I won't speak for the regulator, but what I can say is that two things. A, traditional banks are definitely at a disadvantage because they have huge cost base, antiquated IT systems, plus the bureaucracy, etc., etc. Having said that, the world needs, and a lot of the crypto revolution is about fintech because it is like an alternative currency. Not that I'm an expert on crypto, but it is a fintech revolution. So financial inclusion, the ability to open an account without a lot of paperwork in one day was not there a few years ago. The ability to buy insurance and be able to shop for it and not be sold by a broker. The ability to move money anywhere globally without paying 10% commission, all those things. That's just the beginning. Financial services is a huge industry that needs to become more efficient. Of course, it needs to be regulated. Parts of it, deposit taking, we need to protect depositors. We need to make sure that bad loans are not made. We need to make sure that, but China was way ahead of it in that with Alipay. India was actually the pioneer with online payment. And the government was a pioneer with Aadhaar card and having electronic banking and payments. It is number one today. On that as a base, there's so many services we can offer in India because India is still highly underbanked. The ability, and how do you get GDP growth? How does India become a $5 trillion economy? The only way is availability of credit. We have to give credit to small businesses for them to grow. We have to give them working capital, growth capital. And these fintechs are enabling it. They're enabling a merchant that they know is a good credit, which is not able to get credit from the bank by providing them capital at a reasonable rate, by providing them capital, period. So there is no debate that if India wants to have the GDP growth ambitions that it has, and it will get there to be a $5 trillion economy, it needs fintech because that's the backbone of the economy. As the circulation of money and the availability of capital accelerates into growth and creates jobs. So there's a fine balance between regulation and growth. And of course, it has to be regulated, but you have to unleash fintech. And that's what's happened in the US. That's what's happened in Europe. Large companies have been created, and we have invested in quite a few of them. And PayPal is a huge company now.
Rajeev, we're quickly running out of time. This is usually the time of the year when SoftBank analyzes, strategizes for the next year. What are some of the initial thoughts that you have right now in terms of capital that you're setting aside, in terms of the number of startups you may want to invest in? What's on your radar? What sectors, what companies, if you can share with us?
Nothing new. I mean, we don't do annual planning like that. We just continue. We've kept our pace. We have Fund 2 where we have invested roughly $30 billion, $35 billion this year. We have kept our pace in investing. We believe that the technology and the AI revolution is still at the early stages. Of course, valuations could be high, valuations could correct, markets could correct, but if you have a 5-year view and you pick the right companies, we think we'll make decent returns. So no change in strategy at all. We need to hire human capital, which we are doing. We need to get close to our founders, which is why we have now 11 offices around the world, including Israel, and plan to open more offices. As you get, we need to have an office in Paris. We need to have an office in Berlin. We need to get closer to our founders, so you don't miss opportunities.
On that note, Rajeev Misra, thank you so much for your time today. Jeanette, heading it over to you.
Thank you.